Good morning. It's Matthew Mickey here with the daily profile. And yeah, let's start a war game for Wednesday, January 14th, right? So logging into here, right? We're gonna start with the daily candle science. Good morning. It's Matthew Mickey. All right, so now let that load up. We will come over to the daily chart, right? In our job, and we did do this during re-engineering session at 1600, is to figure out based off of what Monday did and Tuesday did, where are the open, high, low, close probabilities for the day and the closes for today, right? Now we've already taken out previous day low, right? But we're still going to go through the process of identifying like how we would have done it and where our highest probable targets for reversal are to the downside, right? So coming back to science, right? We make sure that we are on the daily, right? Right now it's on the hourly and we have 87,000 samples. We're going to go to the daily, right, to make sure we have 3,773 samples, right? All right, so we know that Monday was bullish and yesterday was bearish, and that yesterday closed, right, below the opening price, right? So we know that we're going to come over here and we're going to say we closed after taking out the high, we closed below the open, right? Which we can see that's only happened 210 times out of the 3,773 times, right? So we see right here that today there's only a 20% probability, and we knew this since 1615 last night, um, that there's only a 20% to take out the previous day high, right? And that there was a 70% to take out the low. So now we're going to figure out, since we've taken out the low, we can click that and we can figure out the reversal, right? So we're going to pay attention to, out of the 147 times this happened, 30% of it reversed before, like made the low of the day and reversed by 0.35. So we're going to come back to our chart. We're going to find that previous day low, and we're going to go to 0.35 off of it, right? Which is right around here, right? And we're going to put our target there. So we're right there right now at the 30th percentile. And then we're going to go figure out the 50th, right? So right here, we can see that the 50th is at 0.75, so about a half a basis point away from where we currently are. And that's off the previous day low. So right there, and that is going to be our highest probable target for the low of the day. And we're going to figure out, so we know that right here, right, that 50% of that 147 reversed before hitting 0.76, right? And then our 70th percentile is 1.21. So this is the lesser probability, 1.21, which is right there. I'm going to take a little red box. I'm going to sync it with the green. Right there, and put the N. So when we look at this, we can see that this is the highest, where the green box is, right, is between the 30th and the 50th. So this is the majority of where the reversals are. And so right around this area would be the highest probable percentile, right? All right. So we're stuck inside of NFP Friday. If you know the stats and how we do that, right? You know that we need daily closes above previous month 50, check, and daily closes above NFP Friday, which we're stuck back in the range, right? So we're aware of that. If we can get those conditions and we move to a 70% green day versus a 30% red day, if we for the daily candle. If we cannot get that, we know that it's a 50-50 split of green versus red, and that you have to rely on your intraday and your ability to read live markets to understand which direction we're going. So now we're going to jump over to the weekly, right? And we see, looking at the probabilities on the weekly, that we had this level right up here, right, that still has a 75% probability, right? So either the high of the week was put in at Tuesday at 8 o'clock, or the low of the week was put in on Monday at 03, all right? Um, because we're currently below Sunday and Tuesday, momentum is saying that this is more likely than the high of the week and that can shift. So now we're going to go and we're going to use some data to understand which one is a higher probable high week or low week where we currently are, right? So we can scroll all the way down and we can see that out of the last 56 weeks, we got 10 that happened on Sunday, 11, 12, 13, 14, 15. 15 times has put the MAE here. And then so right now we can see that this can actually, there's not enough data. This is not obvious enough for us to try to call that like the low of the week or the high of the week is, even though there's not much data to indicate a low of the week or the high of the week has been put in, the MAE, the false move, the first move of the weekly candle, right? It's still not obvious enough. And if we look at momentum, it actually is pointing more towards the high of the week being in. But we're going to let today kind of show us its hand before we start jumping to conclusions. All right. Because it needs to be obvious. If it's not obvious, wait for more data, right? All right. So now we're going to come to our intraday charts, right? And we're going to set up our 12-hour, right? Looking at all the Wednesdays, right? We're going to see kind of the same thing we were looking at on the weekly chart, right? We can see that there's not enough edge to try to call a bottom or a top yet, right? We can see that we have not gone to any of the 50% MAE levels that show us that edge. So we'll wait for 9:30 for that. Like most days, you can get the answer beforehand. So that leads us to our daily profile, which is using, before we were using open, high, low, close probabilities. Now we're going to use session probabilities to kind of zoom in on those if-then statements, right? So we can see that Asia and London, right, both sold off, right? They both are very bearish, right? Um, and that's because we took out the previous day low. And now what we have to find out is there a likelihood of this being the low of the day, or this is the high of the day, or are we expecting both high day and low day to come after? Well, we weren't in a tight range. So we've already spent most of our distribution based off our 10-day median range. So there's that criteria that we have to consider. We haven't completely hit our downside targets that you would expect to hit, right, on the daily candle and candle science. So now let's go into the data and see what this is telling us. So we're going to come over to the daily profile side of the house. Right, and we're going to start with 4,584 days. We need to make sure that we're pulling data for the New York session and not London, Asia, or early London. That'd be awkward, right? And we'll put, what did Asia do? So we saw that Asia broke out to the long side and then went false, right? So let's do that. And then Asia still has this midpoint unattached, right? It's not been broken yet. So we can see that there's an almost 90% probability of that getting broken, but that usually that gets hit in London. So that's not really a 90% probability, because if you look at the time axis, we're running out of times that it's hit. So the more time that we go from not hitting that, the less that probability is dropping. Right now we're going to do London, which is short false. Which that's a one take wonder. So right, and then we know that we went long out of New York 1, right? And so there's a 70% probability that we go false. There's a 29% that we go true, right? So we can see that this is the highest probable outcome, right? Um, right, that we kind of go up to come down, which it looks like we just made that move. For scenario 1, we went up to come down, but we weren't able to make it false, right? So if we reverse right here, that's more of an indication of the 30% true, right? Which would look like this between 7:30 and 11:30, right? So we'd have to expect that true to step in and then we go into range, right? So that's the lower probability scenario. The higher probability scenario that happened between now and 11:30 is that we make a new high and then we come down and then we go into 10 o'clock to 11 o'clock range, right? Which kind of complements the distribution that we already put in overnight. Um, so if that's the case, right? This points to a new high day and low day after 9:30, right? So we're going to be aware of that, right? There's no dominant data for the low of the day at 7 o'clock, right? And there's no dominant data that supports the high of the day at 2200. That is where the current low day, high day is. Now, for the second scenario, long true, you can see there's dominant data that support that low of the day at 7 o'clock, right? From almost a time and price standpoint, right? This is point 0.7, and we can see that the most dominant data for the low of the day is between 7 and 8, and the mode median is 0.1 to 0.7. Our current low of the day is at 7 o'clock at 0.77, but we just crossed over to make this false. So now there's only one possible scenario that we can play with. And that scenario is long false. And we just saw the if then statement happen right in front of us. Long false, unless this is a one tick wonder, which it very much likely might be, but we will not discuss that right now because that's more of an advanced concept that we teach inside the boot camp. Right. So now we can expect, right, a new low day and high day after RTH, right? So we can expect a new low day dominantly between 9:30 and 10:15 and a new high day towards the end of the day, right? We know that from a structure standpoint, right? Oh, wait, 1 minute. Did London get broken? So London's not even broken. So we can expect to come down to possibly come back up, right? So this is the highest probable structure based off of what Asia and London and New York 1 has done between 7:30 and 8:30 that we're seeing live right now. However, right, we see that there's a 50% probability that we return to London. Nope, sorry. There's an 82% probability that we return to London. And from a time standpoint, 10 to 10:15 is typically the second highest most time that we do that. And there's a very, very high likelihood that we come back to Asia. But as you can see, majority of the time that happens, like if we can't do it by 10:15, we have no data that collects that we did it after 10:15 based off what Asia, London, and New York 1 has given us. Right. So I can see the scenario come where we go down to go up, right? So we go down to come back up. Why? Because let's talk about some probabilities that are to the upside. This P12 mid is to the upside. This London OU, which has an 80% probability, midnight. So let's go look at those stats. We have P12 mid, London OU and P12, or London OU and midnight. And then we have settlement in Asia, all in this cluster right here. So we've got a lot of places to say, hey, I see some attractive statistics, so let's draw them out. And let's see if there's probabilities of us going back up into that, right? So, right, something like this is the higher probability move. So let's go verify that with statistics. Right, we see that London OU has an 82%. It needs to happen by 10:15. That New York has a 98, but it has to happen by 10:15, or it's not going to happen. Going to some other levels, right? We can see that P12 mid has a 94, but it typically happens between 6 and 8:30. So it also has to happen by 10 to 10:15, or that probability is dead to us. And then we can see settlement has a high likelihood of retrace, 84, but again, it happens at 8. Yeah. Globex, 88. Primary time of being retraced was the 8 o'clock hour, and midnight has an 86, with majority of it being hit between 9:30 and 10:15. So this is a very cool thing that we can see, right? These P12 mid has a high probability. London OU and midnight settlement in Asia has high probabilities. So now all we have to do, we don't want to fight all this downward momentum, but we definitely know that we're getting to the extremes and we are starting to stack probabilities above us. Right. So what we have to pay attention to is what we call the 4-step reversal. right? This is the 9 o'clock hour. We know that we don't want to, if we keep buying without actual confirmation that the reversal is in, we're going to tick ourselves to death and blow our accounts because we keep trying to fade momentum going downward. So we do something called the 4-step reversal. This will represent the 9 o'clock hour, right? This will represent the 9:30 candle on the 1 minute. And we want if then statements to confirm the reversal. It doesn't mean you have to get through all these steps to start taking longs, but you need to be smart with your position size in. You don't just go all in on a reversal and then you get stopped out. And then if then the condition is still met, you got to go all in again. No, you do a fourth of your regular position size once you see it, and then you find places to add to it, right? So 4-step reversal is, can we get above 9:30 price? Can we get above 9 o'clock's, the whole hour is 50% even during 9:30 and 10? Can 10 o'clock take out 9 o'clock's high? And can we put an instat low in during the first 15 minutes of the 10 o'clock hour? Once those 4 steps have confirmed, we can start targeting these high probability levels, right? So if that can't happen, we've got to sell it. We got to continue to be sellers and continue to ride the meat in the middle of the trend and not try to call a bottom, right? But if we see that 4-step reversal happen, then we can engage with long. So that's my game plan going into this, is like continue to sell until the 4-step reversal starts showing hands. If 9:30 gives me a buy, I'm definitely going to take it, and I will hold extended targets to these high probability levels, and I'll cover the queen and start taking partials at these high probability levels. We continue to sell, I'll shoot for cash flowing targets to the downside off the O5 breaks, or hourly sweepers and all that, right? We will be aware that we might spend the RTH ranging during a range one condition because of what we've done so far overnight and where we are, and we'll range into settlement to produce a red daily candle. So that, and then we'll drift to this candle science target that is a high percentile area for us to get to. But that's where I'm at. Be patient today, and like don't rush and don't fight momentum, right? Like position size for that reversal if you see it, but do it in fourths of your regular position size and be prepared to cut the losses and just, walk away. And then if you can't find the 4-step reversal, feel free to continue selling for cash flowing targets, low hanging fruit, right? Because that's the way momentum is going. Momentum has already moved this much, right? So at any time it can reverse on us, right? So cash flowing, low hanging fruits to the downside, extended targets back to the upside. All right, that's me. Hopefully you guys have a great, wonderful day. Later, haters.